Hello traders, welcome back to the channel. This is your boy Hassan. And guys, today if you're struggling with forex trading, analysis, you don't know how to analyze the market, you don't know where to enter from, you don't know where to exit from, you don't know to spot the trend of the market, you don't know when the trend will end, you don't know when the trend has started, this video is yours. This is going to be a step-by-step breakdown of all the things that I've mentioned with clear and precise examples. So if you don't know anything to do with analyzing the market, this video is for you. Please come, get a seat, and be ready to learn, because I'm going to be taking you through a step-by-step guide on how to analyze the market, how to spot the trend, how to know if the trend has ended, or how to know if the trend has started, and how to enter the market and ride with the trend. So grab your chips, grab your popcorn and your drink, sit with a pen and paper, be ready to learn. This video is for you. So without wasting any time, let's go straight to the charts. But first, guys, you have to subscribe to the channel. We're at 700 subscribers. We're on the road to 1k subscribers. So guys, subscribe to the channel. That gives me a lot of energy to give you more content, more premium content like this one. Subscribe to the channel and be part of this growing community of traders. So we shall start with let's start with the Euro AUD. I told you I'm going to be giving you examples, and this is the analysis that is going to be straight to the point and step by step. Now, when you come to my chart, first of all, I told you the things I use. I use supply and demand, I use top-down analysis, and then support and resistance. Now, someone is going to ask me, how do you incorporate all that in your trading style? And it isn't that too much, because trading is supposed to be easy and recognizable, having recognizable patterns that you can repeat over and over again in the market. Well, it is very simple. I'm using support and resistance on high time frame to support the trend of the market. I repeat myself. I'm using support and resistance on high time frames to support the trend of the market. Support and resistance are the ones that tell me that now we have started this trend, or this trend has ended, and you're going to be seeing it. It is very simple and straight to the point. So now I'm just going to give you a clear example here. So I have my support level here. You see the support level. Price went up to this level, and then started dropping. But before it reached here, price retested here. You see this retest here. Price came again, retested here, and came down, then broke this former resistance. After breaking it, it used it as support. Price broke the resistance here and then used it as support, if you can see here. And remember, we are on the daily time frame. That means these zones are strong. Price used here as a resistance, came down, broke it, and then used it as support. So that is a strong support area. So whenever we see price come back to this zone here, this bar, the support resistance here, the support we drew here, whenever price comes here, we are only looking for confirmation that price is likely to buy like it bought. Look at here, price bought 1 2 3, bought 3 days consecutively. So if price comes back to this area, we are looking forward to buying again to the upside. This time, where are we going? We are heading to the former resistance, because price used this as resistance, so broke down, used it as resistance again, and now it has come. So we want price to come back to this area. That is what we are looking forward for, price to come back to this price level. Where am I? Okay, they have come back. So when price comes back to this area, we are expecting it to have a little bit drop. However, that's not our goal. Our goal is we have reached the previous support. So now we want to look for buys. However, we cannot just enter for buys, so we need confirmations. So what is your confirmation? Indecision candles. Whenever you see this indecision candle, this is a pin bar or a hammer or any doji, any indecision candle at this level, you know that that is now your first signal that we are going to the top. So when you see this indecision candle, you wait for the price action to take off. When it takes off, now you can start buying to the upside. So how do we take advantage of this? Simple. So wait for a price action to take off. The moment you see this bullish candle, this bullish engulfing candle, it shows you that the price has started going to the upside, or the trend has started. So you drop down to the lower time frames like the 4-hour, and now start looking for demand zones for entries, because now we are looking at buys, so we shall be considering demand zone. So just going to mark out each demand zone you see. Now for example, we have a rally, a base, a rally here on the 4-hour time frame. You mark out that and wait for price action to come back here. That will be your entry. You buy to the upside. So I'll just continue dropping time frames below to spot those demand zone. So when I come to the 2-hour, it is still there. You can see it is very clear. Rally, base, rally, two basing candles, and then a good rally to the upside. It is still there. Now then there's another one here. Let me just refine it like that. There's another one here. So now you just use this demand zone to keep on buying to the upside, because now price has hit the support zone and it has shown you that it is likely to go up, meaning we are in a bullish or we are in an uptrend. So what you do is look out for only demand zone and be buying to the upside, because that is where the target is going to be. So one entry would be there, and then one entry on the 1-hour or 2-hour would be here. So you'd get two entries here. To the upside. The risk to reward would be, this one is 27 to get 140, this one is 34 to get 200. So this is 1:5, this one is also 1:5. So you'd get around 400, around 350 pips in that one move to the upside. We also got a zone here, however it was not respected, but price reacted from it very well. Now what have we done, or what is the future for Euro AUD? So the future for Euro AUD is very simple. We go back to our daily time frame. So when you go back to the daily time frame, what do you see? You see that price has been retesting on the shoulders. This is a shoulder, left shoulder, then a head, then price is retesting on this shoulder, and there is also a supply zone on that shoulder, daily supply zone, that one here, that was retested. So now what happens is we are likely to start a bearish trend. So we are likely to be selling. So what do? You drop down to the lower time frames. Drop down to the lower time frames and start looking for only supply zones, because now we are likely to be selling. So we have a supply zone here that price has already reacted from, but is not leaving the area. This one here, price reacted from the zone, and you see how it has dropped. So what we are going to do is, if you want to sell this one, you'll wait for price now to drop from this area, break this structure here, and create another supply zone. You'll be selling from that to the downside. So I don't think that is something very hard. It's very simple. All you're doing is spot your support and resistance on the high time frame, let's say daily or weekly, and then look for your supply and demand zones within that leg of the resistance or support. So for example, we have hit the daily resistance, so we're expecting price to fall. Indeed, after hitting the resistance, price fell for around, let me see how many pips, for around 130 pips. Now it has retraced the previous supply zone and reacted from it, and it is falling. So how do you take advantage of this? Wait for the break of this structure that was formed. The moment it is broken, and then the supply zone that will lead to the break of this structure is what we are going to use to sell up to the previous resistance, the previous support, and that is where the trend will end and wait for confirmation in case we are going to go back. However, if price crosses above here, don't worry, it is still the same. If it crosses above here, we wait for a retest and then a break of structure, then we start buying to the upside. Very simple, precise, and straight to the point. So I'm just going to give you one more example and then we shall proceed. So I think I'll use this one, Euro GBP. So Euro GBP, what do you see? You see that price was going up, then stopped here and dropped down. After dropping down, so we got our resistance here where price stopped, and we got our support down here where it dropped. So after dropping, price went up. So when it comes up here, you want price to create rejections on this level. However, this one did not reach up, but after reaching up here with this rejection, it created a bearish engulfing candle. This is now your confirmation that we are coming down here. After seeing this bearish engulfing candle with a huge rejection to the upside, there is no doubt that we are coming down here. So what do? Drop to the lower time frames, 4 hour, 3 hour, 2 hour, 1 hour, and start looking for sales to the downside. However, this one you will not get a lot of sales because this bearish engulfing candle created a huge imbalance. There's a supply zone here, price did not come back. So this one, I think on the 2 hour, even on the 2 hour there is nothing, but you can continue. I think there was this one, you can continue to see lower lows, lower highs, lower lows, lower highs, a confirmation that we are in a downtrend. And the good thing with this strategy is that you know where the downtrend is going to end. So this was, it was this, yeah, this was the bearish engulfing candle, the daily one. So it created a breakout structure here and then a supply zone. So you mark that supply zone, you're selling from that area. That is one. So we continue. There was a no breakout structure here, but there was a supply zone. So you could or you wouldn't take that trade. Then we continue. Here there was a breakout structure, a supply zone, price did not come back. There was a breakout structure here and there's a supply zone here. I don't know where this one, price used it. Yeah, this one was used. Breakout structure, supply zone, price used it and it dropped. So here in this leg you would have gotten 2 trades. This one you'd risk only $7 to make 57. That is 1 to 7. And then this one is one that I would want. And then there is this one here. This one here. You'd risk $9 to make 40. That is 1 is to 4. And you see how price went? It went up to down there. That is 50. This one came up to 8, up to 70. So this one is 1 is to 9. This one is 1 is to 5.2, which I find very, very good. So that is how you go about that. You can do practice, you can backtest and see what you can get out of it. However, key steps to note: mark your support and resistance on the high time frame, that is daily or weekly, and then whenever price hits the support area, look for confirmations and then start buying to the upside. So you're looking for only demand zones. So that is all for today. Kindly subscribe to the channel. If I've also learned something from the video, don't forget to like. So we meet in the next one. Bye.